Generating income in retirement is a primary focus of any fiduciary worth his or her weight in salt when sitting down with a potential client to determine the best steps to take to maximize the outcome for success. I want you to hang with me here for a few minutes as I take a deeper dive on the options that are available today that were unheard of only 10 years ago. Hello, Dave Dooley here, lead advisor at Georgia Advisory Group, a full-service wealth and income management company. First, let's get this misnomer out of the way. It's not how much you save, but rather how much you spend that is going to be the floor in which we begin our exploration on whether you can succeed toward your retirement goal. I mean, many people ask, if I've got $250,000 or $700,000 or $1 million, can I retire? That's not what you should be asking. If you've saved $250,000 and your monthly expenses are $2,000 and your home and cars and credit cards are all paid off, your Social Security, let's say it's $2,000 a month, can you retire? Absolutely. If you have $2 million in retirement savings and you have $800,000 mortgage and you owe on 2 cars and you spend around $15,000 a month in expenses and travel, your Social Security for you and your spouse assume is $6,000 a month. Well, in that case, you're in serious trouble. So my point is, it's expenses, dummy. Not how much do I have. Now that we have that out of the way, let's talk about ways to maximize guarantees in income. Which dollars makes the best sense to use? So as always, using some assumptions, here let's take a client in their late 50s to early 60s that is deciding the maximum time to hang it up at work. They are deciding whether it makes sense to hang it up at 62 and draw Social Security early or waiting to age 67 at full retirement. One key overriding issue for this decision needs to be health insurance. If your younger spouse can place you under theirs, that's awesome. If not, in most cases, people have to wait to at least 65 when they qualify for Medicare. So, first examine your options here first. Secondly, we know how much you have in qualified dollars. These are dollars like your 401k or old IRAs you may still have hanging around from old employers. These dollars are fully taxable at distribution, and understanding tax consequences is key to getting a full picture of your income bucket. Like I've always said, once you reach 59 and a half, whether you plan to work 2 more years or 10, get those dollars rolled over to your own IRA immediately. Do an in-service rollover as soon as possible. 1, you'll have unlimited choices going forward, and 2, you can now protect those positions from fast-moving markets against losses. I'm not going to dive deep on that, but trust me, move it. Let's assume you have $500,000 in your 401k and $150,000 in an investment account or savings. At 60, I know that if we took that $500,000 and placed it in a self-pension plan when you turn 62, we can generate 6.3% of yearly income for life. So that's $31,500 annual income for life. And more importantly, your spouse's life also. So if we know Social Security at 62 is approximately $1,500 a month, we have a total of $49,500 annual income at a minimum. If your spouse is the same age or a couple of years younger, then we know we can add her income to yours when she reaches 62 also. Now let's assume you want to wait till age 65 when you qualify for Medicare. Then we know we have a couple of additional assumptions that are huge pluses. One is the fact that $500,000 will have an additional 3 years to grow. And I will assume, let's just say a 5.5% increase just based on what today current treasuries are paying. Then your account is now at $587,000. And this is being as conservative as I can possibly be. But in addition, the withdrawal rate now has increased from 6.3% to 6.6%. Why? Because you're 3 years older. Each year you wait to withdraw, the greater amount your income will increase. So in this scenario, your income is now $38,700. And of course, the same principle applies to your Social Security that has gone from $1,500 a month to $2,250, or a total now of $65,700 from the earlier $49,500 at age 62. Most people are usually surprised to see how much the base income can be just using their 401k or old IRA accounts. These are the accounts that you will never take a major lump sum distribution from, and most people just take RMDs anyway. So these are perfect dollars to create your own self-pension. Your investment or savings accounts, after-tax dollars, are the best used for emergencies, travel, and entertainment. Obviously, the larger those accounts are, the better the lifestyle. The worst way to calculate assumptions for retirement income is to use the returns of the stock market in any form or fashion. If your advisor drafts illustrations based on an 8 to 10% return in the market to give you a floor or a base for your retirement income, then run. Yes, they will say, but historically the S&P's done 10% return, so we will use that as a base. I'm telling you, run. You see, the statement is a true statement. But what is also true is if you retired in 1999, it took you 13 years before you made a dime in the S&P 500. If you retired in 2008, it took you 8 years to get back to even in your portfolio, and that assumes you never took any income. Yes, historically, over the last 100 years, 10.5% return has taken place in the S&P. But from 1929, it took 25 years to get back to its highs, and the same scenario took place in many other blocks of time during that 100-year period. My point is this: when it comes to retirement income, you can't guess, you can't play around. You need guarantees. Let us show you what your best choices out there are today that were not even thinkable just 10 years ago. Many of you will say, Dave, I'm good. I can outperform the average investor. Well, then good luck to you. But if you say, hey, let's look at all my options going forward, then you're smarter than the average bear. Choices are a good thing to have, and lifetime income gives you peace of mind. If you like the content, subscribe below. Visit our website and look around. There are countless videos and several subjects focused on you and your family having a successful retirement. Each week we have many viewers just shoot us an email to ask questions or looking to solve an issue. Email us and we'll respond quickly to any questions you have. Till next time.